Update. Hi, my name is Jonathan Campbell. I'm looking really forward to really going through our national data and everything that we have for you in the Lehigh Valley here in Pennsylvania. First and foremost, though, I do want to take the time and just thank you. Just thank you for supporting this channel, watching our market updates throughout the year. Obviously, this is the last one for 2022. Really looking forward to 2023. We're going to have some surprises coming up probably in the second or third month of 2023, maybe different locations that we're shooting at, things like that. But we're really looking forward to really driving and helping you understand the real estate market, understanding the real estate world. And we're really here to give you expert advice on housing. So let's get right into it. So what are mortgage rates doing? It's the number one question we are still getting to this day. What are mortgage rates doing? It's also just what's driving the market, the decisions that are being made on a day-to-day basis. So I wanted to kind of get back and show you an overview of what 2022 looked like from the beginning of the year. And you guys should see I highlighted this part of it. 1 year change in rates from December 20th of actually 2021 all the way to what we are in right now. So you can see this 1 year rate, it was 3.22% on average back in December of 2021. And you can see here, we reached all the way up until about October, November-ish. We got all the way up to over 7% interest rates. So more than double the interest rates have gone. But as you can see here, they've started to come back down. So there's been some very good things from inflation standpoints. There's been things going down, but you can see here, a lot of people have been kind of just not knowing what's going on because interest rates have literally doubled. I mean, imagine just having all of everything doubled over the past year. So yeah, it's going to put a lot of halt in everything, but we're here to help clear that up. With it. And you can see here, really, the mortgage rates are low in the last 90 days. So you can see here, they've risen, and you can see here, it's been a slight decline really over the last 30 days or so of everything. So you can see all these declines are happening as the Fed has eased some things up. But here's today's mortgage rates, 30-year, this is literally as of today. 6.38% on average for a conventional. And yes, FHA, and I keep telling people this, FHA, you can get in the fives as far as your interest rate goes. So you can see that depending on conventional FHA, this is really where the interest rates have been hovering around. I just go back a slide, have been hovering around really over the last 90 days, is right in that mid 6 to low 6 range. So that's really where they've been steady. You haven't seen that sharp, let's just go back again. You haven't seen that big spike that we saw over this past year. You actually see that in this historical data of like from 2010, just running along, going low, going high, going low. But at the same time, this is a monster spike. I mean, this is a historic spike right there to more than double your interest rates in over a year. And that's really why you're seeing a lull in the actual real estate market. But we'll get into what's happening exactly in the Lehigh Valley with that. And it gets me to this. And you've heard me say this, headlines really, they terrify instead of clarify. You hear that me say that in a lot of market updates before, but you just can't trust headlines without the proper context. And that's why I'm here. That's why I want to help you guys understand that. And you can see here, a headline like this: homeowners have lost $1.5 trillion in equity since May as home prices drop. Right on CNBC, all that. And yes, that is actually true, but let's put that into perspective. You can see here, when you look at it, you're basically just back a little bit lower than Q1 of 2022 from the beginning of the year, and you're actually higher than 2021, meaning that you actually have still more equity in your home than you did the entire year of last year, and the year before that, and the year before that, and the year before that. So yes, when you see these headlines, it is going to stop a lot of people in their tracks from doing things, but you just have to have the perspective behind it with it all. So you can see here that really, yes, equity and prices have come down slightly, but you can see here overall, they are still higher than they were last year. And I'm going to show you local data that's actually going to look even more impressive when you want to talk about home prices. So as you see here, homeowners have very high levels of tappable home equity today, providing a cushion to withstand potential price declines, but also preventing housing distress from turning into a foreclosure. Result will likely be more of a foreclosure trickle than a tsunami. And I see that a lot when people are asking me all about foreclosures, what's happening with the prices. You have to go back to this slide before again, showing that people still have a tremendous amount of equity in their home. Yes. Now, if you notice here, anybody that bought in Q1 and Q2 of 2022, that might not be the case for you right now. You might not be sitting on all the equity. But yes, people have bought in 2020, 2021, especially even 2020, huge increases. And if you bought back in 2010, 2011, almost double, triple in some cases what the home is actually worth. So most people are sitting on a lot of that. And you can see here, foreclosures are up, but they're still near record lows. So you can see here, obviously the foreclosures are up a little bit just because in 2021, there was none. The governments were shutting them down. They weren't allowing them for the most part. But you can see here that yes, they are up, but still, they are still at record lows. It's nothing like it was back in 2008, 2009, 2010 with all of that subprime lending. Most people have tremendous amount of equity in their house still. So it gets us to our next question. Will home prices fall? And in large part, nobody has a true crystal ball on all of this. But as you can see here, really home prices have been stagnant as far as sales go because of interest rates. So I bring this all back to interest rates. And everything has been defined by this whole doubling of interest rate really over the last year. And yes, it pauses people to stop buying in the immediate. Obviously, they're dealing with inflation. They're dealing with their groceries being higher. They're dealing with all of their monthly payments being higher on a majority of their things. But at the same time, prices, as we'll get into Lehigh Valley, are pretty darn steady for what they are right now. But for those bearish folks eagerly waiting the home price crash, you're just going to have to keep waiting. As much as demand is pulling back, supply is as well, reducing downward pressure on prices in the short run. So what that means is that even though people are not buying as many homes right now, and we're going to get into that data again to show you guys, but at the same time, there's not enough inventory to really say that. So it's not like there's thousands and thousands of homes that are sitting out there waiting and the inventory is really high. That's just not the case right now. Inventory is still very, very low. So we're not going to see a major crash, but at the same time, things are a little rocky right now with that. So what mortgage rate projections, because a lot of this depends on the mortgage rates, you have to realize people over the last year have seen double interest rates. So it's going to make them pause on a lot of things. So once we see the market really start to steady in and have steadier interest rates, you're going to see the buyers really coming back into the market right away. So as you can see here, many of the projections right now on average are at 6.5 to the low sixes moving forward. So as these rates start to normalize at those price points, it's going to make the buyers feel more comfortable to truly pull the trigger and make that home purchase happen. So home price forecast for 2023, many different opinions. Some saying higher, some saying lower. On average, people are saying that the prices are really going to remain steady. That many of them are they're not going to decline as much and they're not going to accelerate as much. And when you average all that out, you basically get that prices are going to remain steady of what they are right now. So I want to get back to showings because as you saw here, or as you see here, as interest rates have gone up, showings have declined. You can see here, we're going into the holidays right now. This is going to dip again. And right now, if you would say, hey, Jonathan, is it a good time to put my house on the market? I will flat out tell you it is not. You should wait until after the new year to put your house on the market. It's just the data shows it. So what's going to end up happening is as soon as you put that house on the market, you are going to have a steady increase in showings right away. It just will happen all the time. Now, I'm not saying, Jonathan, should you take your house off the market if it's already on? That is not the case. If your house is on the market already and you're thinking about taking it off, obviously everybody's situation is different. But in general, I would not recommend just taking it off the market because your showings are down, because you still have very strong buyers that are out there. You just never know when that buyer is going to be coming through your door. But at the same time, if you're new to this and you want to think about getting your home on the market, just wait. Now, the one thing I would do is contact us, contact your local real estate agent, contact that person that you know, like, and trust, and get your photos done now, especially if you're in the Northeast area or really any of the winter climate areas. There's nothing worse than one is like snow pictures everywhere. So yeah, get your photos taken, things like that. Start to prepare. But yeah, list your house right after the new year. You'll thank me later. You're gonna have tons of shows. You're gonna have tons of activity. Your agent will be much happier to get you on the market and get that going right now. And guess what? I mean, we're only about a week to 2 weeks away from really making that happen right there. So, but if you're in the market to buy right now, what is something that you can do right now to really help you with the home search? And I've shown this really the last time, but I really want to bring this up to you guys again because it still shows that, hey, there are deals to be had out there. So I always tell people, expand your search area. Look at your criteria. Can it be expanded as well? Write lower offers to home sitting. Adjust it to about 10% down. So if you see, not 10% down, but 10% off the price. So if you see a house like listed at $200,000, go ahead, write that offer of $180,000. Make that happen. Then talk to lenders about 2-to-1 buy downs, adjustable rate mortgages, and even assumable loans that are out there that might be at that 3 to 4% interest rate. These are just different things that you can have conversations with your agent and with our team to make your home buying and home selling very, 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 very easy. So let's talk about the Lehigh Valley area, right here in Pennsylvania, local market of ours. Percent of list price received right now is at over 100%. Again, I repeat, homes are still getting multiple offers. Homes are still going above asking price. Homes are still selling very, very well. On average in November of 2022, literally this past month, homes on average have sold a little over 100% of asking price. Average sales price, this is an interesting one. You hear all this stuff about different areas falling, crashing, whatever you have it. Remember, headlines are there to more really terrify you than clarify. So I'm here to show you the real data. So again, this is right from our local MLS, this is right from the Lehigh Valley itself. Obviously, every little location, every neighborhood is a little bit different. That's why we're here to give you expert advice, help you find all those little pockets of areas and give you your exact home value in your house. But you can see here, November 2022, average sales price was $330,333. That's actually up from October's numbers. So home prices actually in this thing have actually gone up. And you can actually see that in this little chart here. There's that little uptick right here. And then year over year, it's actually over 10% higher than the home sales were in 2021. So you can see here, there's been an increase of 10.7% year over year. And even just if you look back at the month, it's actually up a little bit. Now, yes, from your June and July's, it's down probably about another 10 or about 7 to 8% here. So you can see that a little trickle down. But at the same time, the sky is not falling by any means for the Lehigh Valley right now. Average days on market, you can see here, 18 days. Hasn't really changed much really over the last several months. On average, anywhere between 15 and 18 days. Actually, there was no change from this time last year, same exact kind of market. So again, homes are still selling. They're still selling very, very, very quickly, on average 18 days. Now, here's where things start to get a little wonky, is the inventory of homes. Now, keep in mind, we're in the Northeast. We have a winter time here. So yes, homes are usually not listed in the winter as much as they are in the spring and the summer. So you can see here, inventory of available homes is up slightly from last year. So homes are sitting a little bit more, 724 to 728. So again, very, very, very similar numbers. But you can see here, over the last really 3 months, that number has come down from the 8s and 900s to 728. This is why I truly don't believe that the prices are going to truly crash that low, because there's still a very, very low inventory of homes. Historically, you can see here, all time, we are still very, very low. We weren't as low as we were in Q1 of 2022, but we're still very, very low. You can see here, 2010, 2011, very, very high inventory, over 5,000 homes on the market during that time. And right now we're only at about 728 homes. Now, closed sales are definitely down. You can see here. So not as many people buying in November. And why is that? Well, go back to the interest rates. Interest rates exploded through the roof. Really, over that whole year, they've doubled. So yes, remember, closings are because these are people that put their home under contract maybe 30 days, 60 days, 90 days ago, and they closed in November. So yes, we were going right through that huge bubble of interest rates going through the roof and doubling there. But you can see here, closed sales are down. So that's the numbers you'll start to see a lot. But keep in mind, a lot of those closed sales are from things that were under agreement from 2-3 months ago. And that data is finally coming in. And that's why these numbers are so low with that. But yeah, so over 32% drop in closed sales from this time last year. Not as many home sales going on there. Same thing with pending sales. Very, very similar thing. Again, we're in the winter time, but this time last year, the sales are down. Again, interest rates, inflation, things are costing more. People are not as normalized, meaning that these rates have been all over the place. Now, again, over the last 60 days, they've started to normalize. But at the same time, when they've more than doubled, same exact kind of conversation. And then a housing affordability index. This is really the big one. This is 40% lower than it was a year ago. And the reason for that is inflation. We know that everything costs more right now. And really what the affordability index means is that the ability of a homeowner to buy a house. Really, you can see here that they are struggling. Prices are still high. You saw that prices are not crashing. They're not coming down as much. Interest rates have risen more than double. So that, and then inflation, your eggs I saw and groceries was up 12% in a month, which is absolutely insane. So yeah, when you have a family and you have all that stuff adds into just the cost of living and going up. And you see here that housing affordability is very, very, very low right now. When you have high prices, a little bit higher interest rates, and then you have inflation with groceries and your daily living expenses very high, your affordability will be low on the house. So with all that, everybody asks me, should I buy a home right now? And I always tell them, well, that's up to you. But I always bring it, again, when we bring it back to this perspective, is what is your alternative? So here it is. I mean, what's your alternative? It's either stay in your current situation, whether you're living with family, whether you're doing whatever that is, or a lot of people, it's I'm renting. And so again, rents have continued to go up. They continue to still go up. They're not going up as steeply as they are now, but they have gone up. So again, what's your alternative? Is it to continue to pay rent, to continue to give that expense away? Or is it to lock yourself into a home that you like, that you actually like? And so I always say, if you can find a house that meets your financial expectations for a monthly payment and it is a good time for you to buy, then do that. If your situation calls for it, it improves your way of life, it improves your family dynamic, it improves whatever it improves for you, then make it happen and make it happen. So strategy matters in this market more than ever. I really hope you have a happy year. Hope you have a wonderful holiday season. And keep in mind, hey, if you ever need a cash offer, if you ever need that, hey, all of this, you just don't want to show your home. You don't want people to go walking through it. You're looking for a different way to sell. We have that ability. Let us know. The Don Winter team will help you buy your home. We'll help you sell your home for you. We'll give you maximum dollars for your home. We'll give you an instant cash offer. Not only that, once we give you a cash offer, we're adding another $5,000 bonus on top of that for our immediate buyout program. But also just get to know all your options. Let us know what we can do to help you, what we can do to understand the market in your area and help you get your home either on the market, understand where it's at, or get you a simple cash offer on your home right away without having to list it, without having to go through all the hassles of all that. So all that being said, enjoy the rest of 2022. We will see you in 2023. See you guys.